The biggest slasher this month will likely be Jerome Powell, since the inflation data the government released yesterday wasn't as scary as projected, which is expected to keep the Fed on track to cut interest rates. Consumer prices rose a relatively tame 0.3% for the month in September and 3% year over year. That's below the 0.4% monthly inflation growth and 3.1% annual rise analysts had predicted. The inflation report is the only recent government economic data the Fed has to inform its interest rate decision next week, since most of Uncle Sam's number crunchers are on leave due to the shutdown. And investors are betting that the not-so-bad consumer prices report will put the Fed at ease about the potential impacts of cutting interest rates on inflation, allowing the central bank to focus on stimulating the anemic job market by lowering borrowing costs. Better doesn't mean good. Just because prices didn't pop as much as economic wonks predicted, it doesn't mean shoppers aren't getting hit with sticker shock as inflation remains well above the Fed's 2% annual goal. Some price tags could be causing nostalgia for shopping in 2024. Coffee and beef prices rose 19% and 15%, respectively, in the year leading up to September, largely due to weather-related supply disruptions, as well as the impact of tariffs. Meanwhile, bananas, which were long considered inflation-proof, have become 5.4% pricier since April, a trend economists attribute to tariffs. Gardening services cost 14% more than in 2024, while repairing a car became 12% more expensive. And it may get worse. Moody's chief economist Mark Zandi expects tariffs to accelerate price growth in the coming months, with businesses passing on the cost of import duties to consumers for goods like furniture and appliances. Looking ahead, there'll probably be no inflation report from the government next month due to the shutdown, the White House said. That means the Fed will have to rely on private sector data for its last interest rate meeting of the year in December.